Well, we got our much anticipated read on inflation this morning. One of the biggest reports that we get on a monthly basis came in hotter than expected. How much did that move rates? And did we see a sell-off in the bond market? We're going to talk about that in today's call. So year over year inflation came in at 3.4%. That is 0.1% hotter than expected. Economists were predicting a 3.3% year over year read. That's up from 3.1% 1 year ago today. So inflation, if you look at the headline number, it continues to be persistently high, and you would have expected the bond market to sell off sharply on that news, but it didn't. We've actually seen rates improve a hair today, getting us back to where we were a week or so ago. We're going to talk about those numbers here in a second. And here's the reason why. When you strip out food and energy, which are very volatile components of the CPI number, the Fed really focuses more on the PCE report and on the core CPI portion of this report, which again, when you move out those volatile month over month variables of food and energy, you see inflation finally below 4%. Now, you got to go back several years before we dip below that 4% level. We're at 3.9%. That's a huge psychological barrier, or floor rather, that's been breached with regard to this report, and that's important. So the market is reacting strongly on the better than expected core read. That's why we're seeing bonds rally a bit today. And we have finally stopped the bleeding of 10 straight trading days of higher rates. So we had seen rates going back 2 weeks consistently higher day over day. Part of that was anticipation leading up to this report. So getting a favorable number on the core CPI is helping interest rates. Here are the numbers. Again, this is the Mortgage News Daily tracking for a 30-year fixed conforming. This is an actual algorithmic survey of lenders' pricing out there nationwide. So 6.76 is what they are showing today. And as stated, that is exactly where we were 1 week ago. So it's nice to actually go back 5 days or so and recapture some of those losses, because we had gone significantly higher over the last 5 days. Midweek, we were higher than this. So 1 month ago today, we were at 7.10. So we're still about 3/8 of a point better than we were this time a month ago. Look for a continued steady pace of gradual improvement, y'all. That's kind of what I think we're going to see. I think we're going to see blips here and there where we will go through cycles like we have the last 10 days as the markets wait for more guidance and more news. But as that news comes in, and as it comes in potentially friendly on the inflation front, we've covered in previous calls why we believe that will be the case. We should see the overall trend line heading lower. So let's hope that continues. Let's hope it continues for a while. Already seeing dramatically more activity this week than I saw, frankly, over the last 90 days. We've seen more activity just in the most recent 2 weeks than we saw in the fourth quarter of last year. So a dramatic increase in calls, and that's because folks are finally waking up to the knowledge that rates are down almost 1.5 points from their highs. Y'all, we were sitting a hair over 8% in October, and we're now in the mid to low sixes on most lenders' pricing. So in any event, hope this information is helpful for you and for your clients. I am prepared, and I've got a presentation prepared to do housing forecasts for offices that are requesting me to do that for them. I've got some of those lined up already. If you are interested in having me come and deliver a 2024 rate outlook, housing outlook, house appreciation outlook, I'm happy to share the data that I've got and would be willing to do that for your office. Just give me a call, send me an email, text me, however you want to reach out, and I'll be happy to get that set up with you. Again, we're trying to add as much value as we can to your life, and hopefully that will help us earn your business. We do mortgages for a living here. We're always blessed to have your referrals. Stay blessed, stay safe. We will talk to you next week.